Section 44 and Section 45. Guys, I've combined them because they have the same requirements. So instead of you going and studying Section 44 and then trying to wrap your head around the fact that you've now got to study Section 45, if we combine it, because they have the same requirements, you only have to understand it once. It's easy enough to identify which one we are looking at because Section 44 is dealing with financial assistance for the subscription of securities. So this means the company is providing a loan or some sort of financial assistance, maybe it's a guarantee, for a shareholder to purchase shares within the business, in the company. Whereas Section 45 is dealing with financial assistance to directors, and I have now gone and put / related parties because as we work through that section you will see that it is financial assistance to a director or financial assistance to any related party to a director, but it also is financial assistance to a related party of the company, which is not specified in the title, and so that's why I've gone and put that there. Okay, so financial assistance to a director for whatever reason other than business, other than for business expenses. We're giving them some sort of financial assistance for whatever they need it for, and as a result, it's a very complicated decision that the business needs to make if they want to or not. So what is the authorization? The board, or if the company wants to give some sort of outflow of cash or outflow assistance, if it's going to affect the shareholders, the board needs to be responsible. If it's going to affect the directors, the shareholders need to be responsible. But because this is such a significant decision, both need to authorize. So we have to have 2 times authorization. The board needs to authorize and pass a resolution. How do they do that? Majority at the meeting need to vote in favor, and the shareholders need to also vote. And now what they say is the shareholders need to pass a special resolution. So we can see that that is more than the majority must vote in favor. At least 75% of the voting rights present at the meeting need to vote in favor here. Okay, I've said you're within 2 years, so all they're saying is the board could give authorization today, but maybe a year ago the shareholders gave a special resolution, that's fine. But there is a 2-year lapse. That special resolution lasts for a period of 2 years. If the board doesn't authorize within the 2 years of that special resolution, they have to go and pass another special resolution. So it expires, and therefore there is a timing, limit as to when this special resolution lasts. Or if they haven't got a board resolution or the shareholders and a shareholder resolution, but an employee share scheme was put in place for this financial assistance, then it's acceptable. So we've got 2 types of authorization. One is that both board and shareholders have to pass a decision, or if there is an employee share scheme. Because in a question they'll say there's an employee share scheme that allows for this, in which case you now know the board and the shareholders don't have to pass their resolution. However, they don't say anything about that, then you know in order for this decision to take place, the board and the shareholders via special resolution have to vote in favor of this decision. What are the requirements? Oh, remember earlier on we did Section 4, liquidity and solvency. So immediately after giving this financial assistance, they need to be liquid and solvent, both of them. So they have to test that. We have to test that after that outflow has taken place. Remember, for solvency, we're doing fair value of assets and liabilities after. The terms of the financial assistance must be fair and reasonable, yes. obviously any business decision should be fair and reasonable. So you're going to have to look in the question. Is the interest at a market rate? Is there no interest? Is the term for 20 years? These are the things that make it reasonable or not. And so when you're looking at that, you just kind of want to use your professional judgment, maybe looking at market terms to see if it's fair and reasonable. Any restrictions or conditions in the MOI must be adhered to, so you're always going to have to make that note. You don't know what they are unless they put out in the question, so as a theory point, they must adhere to the MOI. And if it is a Section 45 financial assistance to directors or related party, they have to give notice to shareholders within 10 days if the financial assistance exceeds 1/10 of 1% of the business's net worth. Otherwise, within 30 days. If the requirements of this are not met, so they haven't passed a special resolution, or the board hasn't authorized, or they're not liquid and solvent after, or the terms are not fair, or the MOI conditions have not been adhered to, then this decision is void. They can't go and retrospectively authorize it. The decision is void, it cannot take place, and they have to reauthorize correctly for this decision to take place. But just note, if a director was present and they failed to vote against this decision, they will be held liable for losses as a result of this decision. Note there, guys, you have to vote against the decision. It's not good enough that you chose not to vote, because then you will still be held liable as a director. Okay, just so we can see that the above requirements are not necessary if the financial assistance is for business expenses. So that's what I put over here. All right, very important sections, guys. They're going to come up often. They're going to give a loan to a shareholder so he can purchase shares, or they're going to give a loan to a director because he's having financial issues. And then you are going to have to say, in order for him to do that, there needs to be a special resolution, a director's resolution, liquid and solvent after. Terms must be fair and reasonable. The MOI must be adhered to, and if it is a loan to directors and it exceeds 1/10 of 1% of the net worth, the shareholders need to have notice within 10 days. If it doesn't, within 30 business days. This is going to come up. So I'm going to put you on MB because this is definitely coming up at some point. And you need to be able to put the theory down and apply the theory to the scenario. Have they met all the specific requirements? So there's 44, financial assistance for the subscription of securities. It says it doesn't include if the company is in the business of lending money in its ordinary course. Okay, so it's only if they're giving specific funding to somebody to purchase shares in the company that they don't normally do. Okay, what does it say? The board may authorize this financial assistance, and they give you some examples of what could be considered financial assistance. So it doesn't necessarily have to only be a loan, guys. It could be a guarantee or provision of security, okay, or warranty to any person for the purpose of or in connection with subscriptions of any options or shares that are issued or to be issued by the company or a related or interrelated company for the purchase of securities of that company or related or interrelated company. So again, this is not specific to just buying shares in this company. It could be to buying shares in a related company. What happens? The board needs to authorize, and then it either needs to have second authorization by an employee share scheme or a special resolution passed within 2 years by your shareholders. Okay, so it doesn't take place unless you've got 1 and 2 or two types of authorization. Then the board has to go and make sure that they're liquid and solvent post, the terms are fair, and they adhere to any restrictions in the MOI. If there's any inconsistencies, this decision is void. Okay, and your directors who were present and failed to vote against will be held liable. Your loans to or other financial assistance to directors, again, it tells you financial assistance, lending money, guaranteeing a loan, securing any debt or obligation. So it doesn't necessarily have to be a cash outflow. Doesn't include if it's lending money in the ordinary course of business or if it is for business expenses. Countable advance for business expenses. Okay, the board may authorize this, and it says again, if it's financial assistance to a director or of the company or of a related company, so director of a related company, or if it is financial assistance to a related or interrelated company. So there you can see now it's not only directors that this adheres to. The board may not authorize unless there's been the second type of approval by employee share scheme or the second type of approval by special resolution of your shareholders. Okay, after that, they have to make sure that they are liquid and solvent after, the terms are fair, and they adhere to the restrictions in the MOI. Okay, and then this has got that specific additional notice being given to your shareholders within 10 days if it exceeds 1/10 of 1% of the company's net worth, or within 30 business days. Okay, and it's void if it is non-compliant with any of these requirements, and your directors will be held liable if they were present and they failed to vote against it.